And let's move on to Nigeria's fixed income market. Bankole Odusanya, fixed income trader at UBA, joins us for that discussion. Bankole, it's been a pretty volatile week for the Naira, but we'll get to that in a little bit. But let's focus a bit more on the fixed income market right now. Of course, going into this month, I think the key focus will be the bond auctions and the treasury bill auctions. But if we wrap up the month of February, I think the key takeaway beyond the volatility is that yields continue to trend lower. Your thoughts on what we've seen this in February?
Hello, come again, Wole.
Hello, I was asking to get your thoughts on the activity we're seeing in February, that we've seen in February for the fixed income market. Your thoughts about where yields are right now and the factors driving the market.
Yeah, in one word, what has happened is that we've seen a lot of money coming for bonds maturity, over 485 billion. And then we had a lot of T-bills maturities too. Usually, the CBN and the DMO would issue debt to take out these funds, to avoid inflation and all that, and then to continue to support our drive to develop our infrastructure in the country. But what we've seen is that the yields have dropped so much because of the FDIs that came in since the last quarter of last year, and then going into this year also, we've seen this money coming. Even though we're seeing some maturities that they invested in mature, we may see marginal repatriation and all that. But basically what's happening is that there's a lot of money. Yields are not where they used to be, basically, and you can actually do overnight at where these securities are. There was a time where we had 2-3% higher than what money market rates were doing. So that gap has closed, and we've seen thinning of the margins that we used to enjoy in the securities, fixed income securities market, basically. And if you look at the yield curve on the bond especially, all the securities are around between 10.45 to 10.7 levels, regardless of the tenures that you have there. So activity has waned a little bit in the secondary market for bonds. For T-bills, it's still quite active, but you're seeing some profit taking and some people coming in, but not for long. You expect that something will give. It's either that when the government through the DMO reduces the amount they are going to issue, when we see the calendar, because it's just a rumor that the calendar is out, we haven't seen it yet. When we see it, it then determines, it affects the market, how much people want to do. If there's a reduction in how much they'll be issuing, we want to imagine that all these funds will go back into the secondary market and then increase the demand and drive down yields, basically.
You mentioned that bond yields are slightly over 10 right now. Are you one of those that thinks that we're going to see sub-10 bond yields across the curve this year?
Like I said earlier, it will be dependent on what the DMO will be issuing. I know that the Ministry of Finance is very, very serious with trying to reduce amounts we're borrowing locally, because we're borrowing long-term bonds at higher than 10% level. In fact, some bonds were issued last year at over 12%, 13, 14, 15%. The problem with that now, with what the ministry is trying to achieve, is that the Senate, in trying to pass the budget, what they've done is that they have limited how much we can borrow abroad. The government, the executive, proposed over $9.2 billion to be borrowed from overseas. That's through Nigerian Euro bonds. But it's been reduced, and so that gap has to come back. So we are really anxious. We would like to see what amount they will be borrowing, because what they did this first quarter was actually contrary to what they had speculated, that the amount would be reduced.
Right?
But what we
actually
saw
seen
in
them
the calendar and what
borrow
they
more
issued,
this
borrowed more
quarter
than the first quarter
the same time
of last year, basically.
No, very, very important point to make there. Okay, but let's move back to the OMO transactions from the central bank. I noted earlier on the show, it seems the uptake rather for those OMO offers has not been very strong. I want to get your thoughts on why. Yes,
I just hinted on that earlier on. All securities are between 10% and then 10.65. It looks like we've dragged them to a state where we would like to see what happens next. Of course, one of the major highlights of this month will be the MPC, what the CBN will do with the rate, the monetary policy rate. Are they going to reduce it? All that will also point to the direction of where we're going into. You'd also do not want to over-invest at sub-10 levels, and then there will be, after a reversal, you bite your fingers. So basically, I think people are just trading soft and investing on the short term, placing at the money market 7 days, overnight and all that. Basically, you want to see what the government will issue at the bond auction. You also want to know what's going to happen at the Monetary Policy Committee. You want to see what inflation will do, So, I mean, it's the end of the first quarter. People are reviewing what they've done and achieved in the first quarter, basically. So I mean, the yields are not very attractive at sub 10.
Okay, so
basically, you take your money to CBN at 10.
I hear you say that people are cautious right now because of course, several things to think about this month, the bond auction, the Monetary Policy Committee meeting. But now let's talk about the Naira. The Naira currently trading was slightly stronger today, closer to 158 Naira to the US dollar. It was as weak as 158.50 at some point this week.
Yes.
I want to get your thoughts on that dynamic and where you think the Naira is headed going forward.
Yes. We've not been able to pinpoint where the demand came from, but what I can say, what I saw was that this devaluation started on Wednesday, just as the news came in that the president had signed the budget. The news of the budget being signed actually means we are going to start spending, and a lot of our spending, because we are import dependent seriously, it meant that people started taking positions, based on what they would be bringing in, buying in. So many projects that were pending, would require this and that to be bought and all that. That's one factor. You want to look at the law in inflow of monies for securities because of the levels at which we have these yields at. Right. And you want to look at, a couple of other factors like the drop in price. We've seen since February a drop in crude oil price also. I mean, it may not be a major factor, but the most obvious is the one I spoke about. The president signing the budget into law on Wednesday, and immediately the devaluation started. It got to 158.50 yesterday, but I know some oil companies sold some money, undisclosed amounts. Of course, trying to take advantage, they would have sold more than they usually sell, take advantage of those high exchange prices. So this actually probably saw the reversal, a pullback of 50 kobo today.